another thing to think about when going through a career transition is reviewing your your assets and your debt. And I guess one thing that we find is that a lot of people over time they have a relatively haphazard approach to accumulating assets, and often there's no real strategy or plan behind that. So we think even just reviewing your existing assets is often a really good thing at this time, and just looking at is the investment itself a good investment? Should it be kept? Should perhaps you be selling some investments that are no longer particularly good investments? And even looking at things like the ownership or the structure of who's owning the assets. Perhaps should an investment be held in someone else's name, or should it be held in a family trust or a company or something like that? And then you've got tax implications as well. So looking at the tax that you might be paying on on existing investments, or even considering what CGT, what capital gains tax you might pay if you were to sell some existing investments. They're all things that really should be considered when you're looking at particularly your assets. So so there's some things that we think you should be thinking about when it comes to your assets and I guess and your debts as well. Whether it's your debts, your offset accounts, things like that. They're all things that really should be considered if you are going through a career transition.
Yeah, so we find offset accounts are a great tool to initially park your money from the redundancy in order to get it working straight away. So some people aren't aware of what an offset account is. So essentially the way that it works, it's like a transactional account that's linked to your mortgage or your investment loan. And rather than earning an interest rate on that money, you are able to offset the interest that you'd be paying on the mortgage. So the benefits of using an offset account include giving that flexibility. So if you need to access some money from time to time, you can do that without having to go to the bank and asking them for some money and then explaining what you need the funds for. And also it's, as I touched on, rather than earning an interest rate on that money, you're saving on the interest on your loan. So generally the rate's a bit higher than what you'd be getting on a normal savings account, where rates are around 1% to 2% compared to mortgage rates of being 3%, 4%, or even 5% depending on where. The downside of using an offset account though is if you're not disciplined, it's very easy to dip into that money and essentially erode it. Yeah, so we've got to be careful around how you use that there. But if you are disciplined, it is quite a powerful tool. So hopefully that's given you some good tips and insights around what are the key considerations when going through career transition.
Yeah, and if you do want to get a better insight into perhaps your own personal financial situation, feel free to go to our website and check out our free financial health check.